Ladies and gentlemen, welcome to BSV TV. I'm your host Satoshi, and on this show we'll be defending the one and only, truly genuine Bitcoin. The Bitcoin that Satoshi Nakamoto designed in his white paper as a peer-to-peer electronic cash system for the world. Let's get the disclaimers out of the way. So all the statements that you hear on this show are opinion and must only ever be taken as opinion. They are never to be taken as any form of advice, family, financial, sexual or otherwise. And on that note, let's sit back, relax, have some fun and enjoy the show. Get paid for your content in Bitcoin and set your own fee on Streamanity.
Yeah, I'm not surprised I wasn't asked why I'm convinced Craig is Satoshi. I posted on Reddit. He signed in my presence using the private key from block number one, the very first mined Bitcoin block. On a computer that I'm convinced had not been tampered with, on software I'm convinced that had not been tampered with, a message of my choosing.
At Enchain, we've just funded a number of universities doing, so far, a test up to 1 gigabyte because it validates what we've already done independently. We've tested up to 380 gigabyte blocks. We've tested 1 million transactions a second and transaction sizes up to 20 megabytes. Super complex scripts. Basically ones that can run operating systems. That's all of global commerce times about 50. On top of that, we can have complex scripts. On top of that, we can scale each of those transactions 1,000 times, which effectively means about 1 billion transactions per second, which means we can then have all derivatives, all complex trades. That means high frequency trading. It means everything that happens globally.
Is the market that effectively BSV is going for, is that global e-commerce, which is currently valued at $29 trillion?
No, that's too small.
Buy and sell Bitcoin instantly at bsvgravity.com. And you can now book and pay for your winter holiday at skibsv.com. Alrighty people, it looks like we are live just after 5 on Thursday, the 25th of March 2021. Let's just crack straight into it with some articles that I want to get through today. Never a dull moment in crypto. I just replied to this chap earlier on today who said, looking to speak to a Bitcoin expert for Forbes Advisor UK. Can you help our readers understand the basic concept and finer details? Get in touch, and that's Mark Hewson at ForbesAdvisor.com. I have written to him, and he already said thanks to everyone who got in touch. Sent him all my articles here. You know, I doubt he'll read them. You know, but I mean, look at that. They're all there. Quality information that none of these shitcoiners know or understand, because shitcoiners. Shit for brains. But check this out. You can actually go to CoinGecko on the BSV page, and you can vote as to how you're feeling about BSV today. So that's going to be another one on my chart show. I'm going to click that I feel good every day, because it's the only one that you can actually feel good about, because it's the only one with any real value. Talking about value, let's just check the shitcoin market quickly. Because shitcoiners be shitting themselves. Look at that. 8% in a day for cool coin. They're like, why are people selling this cool coin? It's Bitcoin. It's the best thing since sliced bread. No, it's not, mate. Let's have a look at what Bitcoin is doing. Oh, nice little dip there. Look at that. You can pick up Bitcoin for $190. Let's see if this allows us to go back to... Oh, no, it's still not showing all time. Oh, dear. I mean, look at that. It was like $667 here. Why is it not showing all chart? Good grief. Coin market crap. No wonder I call you coin crap. Not even allowing us to go back to see all on it. Never mind then, eh? All right, let's have a look at some of these articles that I want to read over today. Calvin suggested this one. So let's have a look at this. CoinGeek says here, the endangered state of digital asset exchanges. Ooh. According to a Bloomberg report, the Commodities Future Trading Commission is investigating Binance Holdings Limited for permitting US residents to access certain services. This follows the CFTC's action against BitMEX for violating the multiple regulations and Coinbase Global's Incorporated recent disclosure of an extensive CFTC investigation. No wonder Coinbase want to put off their initial public offering. Talk about going to scare investors away. As they should do, because we know it's an absolute bucket shop. To those that believe that digital assets operate outside of government oversight, the US's expanding offensive on digital asset players should be a clear signal that the existing regulatory structure applies to the digital asset ecosystem. To that end, this article will discuss developing legal themes that endanger current digital asset exchanges. Surprisingly, beyond the current CFTC probes, some of the major names in the space, Binance, Kraken and Coinbase, make appearances across several legal risk categories. Not surprisingly, a further subset of this group, Binance and Kraken, along with Shapeshift, was arguably involved in a delisting campaign against Bitcoin, an established digital asset that is not a security because the exchanges and related persons did not agree with the personal position and stance of a specific individual. While these exchanges continue to list XRP, what a joke, what a joke. A digital asset alleged by the SEC to be a security, and ETH, a digital asset I have previously outlined as fitting the characteristics of a security, especially as it's moving to proof of stake. As stated by the SEC, federal securities laws are based on a simple and straightforward concept. Everyone should be treated fairly and have access to certain facts about investments. According to actions of Binance, Kraken and Shapeshift, debatably violating this principle and US securities laws discussed below. As I will outline below, insofar as digital asset exchanges wish to continue serving the US market without being shut down, they would be wise to undertake much more careful vetting of the tokens they list or delist, the programs they provide to users, for example staking ETH to the Ethereum 2.0 network, and internal compliance regimes to ensure compliance with anti-money laundering regulations, for example. Exchange liability for listing securities tokens. Over the past several years, the SEC has brought civil lawsuits against several token issuers, alleging violations of US securities laws. Courts have ruled in favour of the SEC in two recent cases involving tokens not associated with initial coin offerings. See the SEC versus Kirk Interactive Incorporated and SEC versus Telegram Group. Yeah, remember those. However, these lawsuits did not present the question of whether and to what extent exchanges may face liability for listing and facilitating digital asset transactions that fall within US securities law. Recently, however, the SEC has filed a lawsuit that challenges the SEC versus Ripple Labs, and the SEC filed a complaint against securities law violations against Ripple Labs, the issuer of XRP digital token. The SEC alleges that Ripple's continuous offending of the offering of this token from 2013 through the present constitutes a series of unregistered securities transactions. XRP has long been listed by various major digital asset exchanges, including Binance, Coinbase, Kraken, Shapeshift, Bitfinex, and OKCoin. In the wake of the filing of this complaint, though some exchanges have announced their intention to suspend trading of XRP for US customers, others continue listing XRP despite the SEC's filed complaint. These developments raise the questions of whether those exchanges that have listed and facilitated trades in XRP, whether or not they have since delisted, have exposed themselves to liabilities under US securities law. This law also raises the question of whether the exchanges have chosen not to delist the wake of the SEC's complaint against Ripple face heightened exposure risks. If the court should agree that the continuous distribution of XRP qualifies as a series of securities transactions, several provisions of US securities law could give rise to exposure for exchanges that have facilitated purchases, sales, and exchanges in XRP. These provisions include selling unregistered securities liabilities, an exchange, whether registered or not, that lists and allows traders in unregistered securities could be liable under Section 5 of the Securities Act 1933. Securities Act as amended, which prohibits selling an unregistered security by use of interstate commerce. Next one, Unregistered Securities Exchange Liability, Section 5 of the Securities and Exchange Act 1934, as amended, prohibits any exchange that does business in a whole or substantial part in the United States from listing any security, registered or not, if that exchange is not registered as a national securities exchange with the SEC, which none of them are. Unregistered broker/dealer liability, Section 15A of the Exchange Act, makes it unlawful for any broker to deal or to facilitate securities transactions by way of interstate commerce unless the broker or dealer is registered with the SEC. Aiding and abetting liability. The Securities Act exposes parties to aiding and abetting liability where there is proof that the exchange acted knowingly or recklessly. Recklessly is the one they're going to have a hard job getting around there. In substantially assisting the issuer of unregistered securities to violate Section 5 of the Securities Act. Why don't we just give them a shovel? Keep extending the rope for them. The first three provisions are strict liability, requiring no proof that an exchange knowingly or recklessly violated the law in listing or facilitating transactions in the unregistered securities. In contrast, for the SEC to establish aiding and abetting liability, it would need to prove that the exchanges acted with Scienter. I've never heard that before. Scienter. Let's just do a quick Google search on that one while I'm here. Learn something new every day, don't we? Here we go. Meaning.
Scienter.
Scienter. The fact of an act having been done knowingly, especially as grounds for civil damages. There we go. Scienter. Thus, the exchanges that have listed XRP could be found liable under the first three provisions, regardless of whether they knew or understood that transactions in XRP might qualify as securities transactions. They may likewise be liable whether or not they opted to delist in the wake of the SEC's complaint, since there is no requirement that they must have been put on public notice of the unlawful nature of the transactions before exposure may attach. So again, not knowing the law is no excuse, unfortunately, for these guys. However, those exchanges that have continued listing XRP in the wake of the SEC's complaint face potentially heightened penalties, as their conduct would likely establish reckless disregard under the securities law, as showing that would expose these exchanges to drastically higher per transaction fines. Ooh. Each of these exchanges that has listed XRP, whether or not they have since chosen to delist XRP, faces serious exposure under US securities law. Furthermore, those exchanges that have refused to delist XRP in the face of the SEC's 71-page complaint detailing how Ripple's distribution fall afoul of US securities law face even greater potential exposure. The exposure risk, moreover, extends beyond the decision to list XRP to all similar tokens listed in their form, on their platforms. As I discussed in my previous article, if we accept the Hinman puzzle and assume ETH transitions away from classification as a security, which I argue is debatable, there are compelling reasons to conclude that Ethereum 2.0 brings it back to its state as a security. If the Ripple complaint makes everything clear, it is that the SEC will not give exchanges a pass for facilitating violations of US securities law. Thus, insofar as digital exchanges wish to continue serving the US market without being shut down, they would be wise to register with the SEC or undertake much careful vetting of their tokens they list to ensure that they are not listing tokens that implicate US securities law. Oh my goodness me. So pretty much, they're all securities. Bitcoin SV, BSV, the genuine Bitcoin, is the only one that is not a security. As we know, Blockstream tampered with the signatures, and when you tamper with the signatures, you centralize the commodity, and when you centralize something, it then becomes a security of which they issue, and they are therefore liable. And if people don't believe me, we'll just find this quick clip here of Samson Mow admitting that Blockstream now actually control Coolcoin. So have a listen to this. Take the floor, Samson Mow. Here we go.
Bitcoin was created by the central bankers that enslave you today. It is their scapegoat.
How do you answer those, Max and Stacey?
I think the evidence is clear that they do not control it. There's 10 years, almost 11 years now of track record.
Yeah, Blockstream controls it.
I'm sorry, go ahead.
Who does?
Blockstream.
Oh, cue the nervous laughter.
Oh,
all right.
I was looking at you when I said that.
I'm sure you were, Stacey.
Yeah, I'm a block. I have a spy. I'm one of the spies. No, so this, it's an interesting.
It certainly is an interesting Max. Hey, shout out to Diddy Weldon in the chat box. Say she dumped Post Malone's virtual concert in favour of Satoshi Now. That's dedication. Thank you very much, Diddy. Muchas gracias. And Oxono is also in the house. Thank you very much. Digital Asset Exchange Ethereum 2.0 staking programs under Howey. Oh, though this is the Howey test, which determines a security. Ethereum's creators recently announced the launch of a new Ethereum network, Ethereum 2.0. This network will run alongside the existing Ethereum network, also known as the Ethereum mainnet. In order to launch, the creators require a certain threshold of users to stake 32 Ethereum each to the Ethereum 2.0 network and act as validators on the network. In exchange, the Ethereum Foundation promises a schedule of rewards to activate validators. Oh dear, that sounds like a security right from the get-go. In the wake of this announcement, more than one major digital asset exchange have offered its customers the opportunity to stake ETH through their trading platforms. Presently, I'm only aware of one exchange, Kraken, that is offering a staking program to US users, with Coinbase offering ETH staking waitlists to US residents. Exchanges have offered their users the opportunity to stake less than 32 Ethereum, required to fund a validator, and to pool those users' assets with the staking asset of other users to be able to earn validator rewards as a collective. Oh my goodness me. These developments raise the question of whether these programs amount to an offer or sale of a security under US law. It is absolutely a security. There are several aspects of these programs that would likely cause the SEC or a court to conclude that the entire process constitutes an investment contract under the Howey test and thus qualifies as a security that must be registered. Yeah, and if it's registered, they won't allow it because it's an absolute load of crap. There's no value in it whatsoever. As to the first element under Howey, a court would likely find that the exchange users who stake ETH to the Ethereum 2.0 network through these programs have made an investment of money through the platforms. Absolutely, yeah. As to the second element of the Howey, a common enterprise, a court would likely find as to those users who stake less than 32 ETH, these platforms have engaged in pooling of funds that would give rise to horizontal commonality, because these exchanges can only participate as validators by staking exactly 32 ETH to the Ethereum 2.0 network. The SEC might plausibly be able to establish a stricter version of vertical commonality to the extent that the exchanges have staked a significant quantity of their own ETH holdings to the Ethereum 2.0 network, such that they would be incentivized to support the asset's value. Yeah. As to the third element, a reasonable expectation of profits, there are several factors that would support a finding that users who stake Ethereum through these exchanges have an expectation of profit. Absolutely, that's the only reason they're doing it. These exchanges generally offer their customers rewards between 5 to 20% per year. That's a huge amount. Accordingly, users who stake ETH to Ethereum 2.0 network through these exchanges would reasonably expect profits through their validator rewards. Absolutely they would. Finally, the SEC and the court are likely to find the fourth element likewise satisfied. These elements ask whether the users who stake via these platforms bear a reasonable expectation of profits based upon the entrepreneurial or managerial efforts of others. In evaluating this element, a court would likely consider the role of the exchanges play in these staking programs. To run a validator node on the Ethereum 2.0 network, one needs hardware and financial resources of node operator costs. These exchanges have offered to provide these resources, post themselves as the validator on behalf of the other users, and under certain circumstances bear the risk of on-chain penalty and forfeiture in the event that the users goes idle, engages in a malicious conduct, or fails to validate whether ETH is staking to the Ethereum 2.0 network, where the exchange is at fault, or such penalty. A court may thus reasonably find that the chance of obtaining the validator rewards available to Ethereum 2.0 validators depend heavily on the efforts of these exchanges to 1. Provide the resources and hardware required to run the node, and 2. Ensure that the validator does not go idle, fail to validate, or engage in miscellaneous conduct that would result in forfeiture of the ETH staked to the new network. While this question is entirely novel to the extent that these programs allow US users to participate, the facts above would reasonably support the SEC's and federal courts concluding that these programs constitute investment contracts under Howey. Yeah, and again, that's the Howey test, which is like to do with the Howey versus the SEC, something like that. The Howey test. There we go. That's the name. The SEC versus WJ Howey Co. That's the actual full name of the. Well, that's what Howey is abbreviation of. Again, given under the US expanding offensive on the digital asset ecosystem, it is clear that exchanges will not receive a pass for facilitating violations of US securities laws. Anti-Money Laundering Act of 2020 and digital assets. Ooh, this is getting juicy. The National Defense Authorization Act, enacted on the 1st of January 2021. Oh, is this AMLD 5? I wonder if that's what this is. Includes Anti-Money Laundering Act of 2020 AMLA, and the AMLA is the most significant change to US anti-money laundering law since the Bank Secrecy Act of 1970. The Bank Secrecy Act seeks to prevent and detect money laundering and the financing of terrorism. Building upon this, the AMLA seeks to, among other things, modernise the Banking Secrecy Act, establish a uniform reporting regime, codify a risk-based approach to anti-money laundering, compliance, and most relevant of this article, apply anti-money laundering laws to digital asset businesses. In addition, the AMLA increases criminal and civil penalties. For violations of the Bank Secrecy Act, vastly expands the subpoena powers available to the Department of Justice and allows the DOJ to serve subpoenas on any foreign bank in investigations relating to violations of the Bank Secrecy Act. US criminal law or civil forfeiture statute, and established additional incentives for whistleblowers to report violations by increasing incentives vastly to 30% of the total amount collected by the government where sanctions exceed $1 million. That's actually quite an incentive there. Wow. Putting this together, exchanges serving the US market would be wise to undertake much more significant compliance regimes to ensure that they are not violating anti-money laundering laws. As per 2021 Crypto Crime Report by Chain Analysis, exchanges are the main destination of unlawful funds. And in the 3 years studied by Chain Analysis, the top 2 services accepting unlawful funds have not changed. Though not mentioned by name in the 2021 report, in the 2020 State of Crypto Crime Report by Chain Analysis, the lead exchange receiving unlawful BTC was Binance. All those holding Binance coin, they've no idea. Thin ice. This should be a red flag for regulators, given Binance is the largest operating exchange and is arguably subject to the anti-money laundering regulations highlighted in this section. Imagine CZ behind bars. I can, unfortunately. Well, I can, fortunately. I don't like the guy. Conclusion. For the digital asset space to flourish, compliant exchanges are required to protect investors, facilitate access to capital, and support fair, orderly, and efficient markets. What's this about the author? It's Johnny Jaswal. Is that the guy who wrote this? Johnny Jaswal. All right. Not heard of him before, so let's see what his background is then, shall we? There we go. Johnny Jaswal is the Managing Director and General Counsel of the Jaswal Institute, responsible for providing regulatory, legal, government regulations, strategic and related investment banking advisory services. Oh, good background there. He has a wealth of experience advising on regulatory matters, mergers, acquisitions, divestitures, and capital raising activities. Johnny represents global blockchain and digital asset companies and is responsible for leading international advisory services. In addition to to advising governments and regulatory authorities on digital asset legislation, Johnny has executed the global M&A, capital raising, regulatory and tax strategies for multiple businesses. Prior to founding his advisory firm, Johnny was a member of senior management on the corporate development and strategy team of TMX Group, which owns a portfolio of financial and technology assets, including the Toronto Stock Exchange. All right. An investment banker at TD Securities, which is among Canada's top-ranked investment banks, a business lawyer at Blake, Cassell and Graydon LLP and Goodmans LLP, two of Canada's top law firms, and an engineer in several sectors. Johnny has a Masters of Business Administration from the Schulich School of Business and a Juris Doctor of Osgoode Hall Law School, a Bachelor of Engineering, Electrical Engineering from Ryerson University, and has been admitted to the Ontario Bar. Wow. That's a guy with a lot of credentials behind him, I would dare say. Wow. Check this one out. Wall Street posted this. He said, here comes another one. Fidelity to launch ETF as an investment giant builds its digital asset business. So again, Fidelity is responsible for, I think they've got over $4 trillion under management. I mean, they're absolutely staggering. Surely they must be one of the biggest in the world. $4 trillion is huge. So that's 4,000 billion. So Fidelity to launch Bitcoin ETF as investment giant builds its digital asset business. Fidelity Investments is preparing to launch its own Bitcoin fund, that's Coolcoin, as the investment giant works to cement its clout in the market for digital assets. FD Fund Management, a subsidiary of Fidelity, said it plans to provide financial backing for an ETF called Wise Origin Bitcoin Trust. That should be Shitcoin Origin Coolcoin Trust. The fund will track the performance of Bitcoin as measured by the Fidelity Bitcoin Index, which Fidelity created to track the price of the digital currency. I mean, I wonder where they're going to get the price from. I mean, most people get them from Coinbase, and those figures are fudged. Though the world's largest digital assets has struggled in recent weeks, its current price around 52, no it's not, it's 50 now, is far above where it traded 1 year ago under $10,000. Fidelity Investments is preparing to launch its own Coolcoin exchange trade fund as the investment giant works to cement its clout in the market for digital assets and virtual currencies. So I mean, effectively what they're doing is they're knocking on the doors. You know, they've started their journey down the rabbit hole. You know, imagine when everybody gets to the bottom and realizes that it's an absolute piece of shit and literally Bitcoin is BSV, the only genuine digital commodity. You know, like honestly, it's going to be devastating, you know. But it's a capitalist system. Those who get there first are rewarded. That's it. You know, those who move last, going to lose everything. So FD Fund Management, a subsidiary of Fidelity, said on Wednesday that it plans to provide financial backing for an exchange trade fund called the Wise Origin Bitcoin Trust. The firm filed a Form S1 with the Securities and Exchange Commission in a preliminary registration statement for the fund. I mean, you can't deny that Bitcoin is getting coverage. I mean, everybody's in it. They just don't get it, you know. I mean, people have made such a lot of money from it. All they're doing is just simply asking those who have made the most of money. You know, well, I mean, can you imagine what? I mean, what happens when CSW proves himself as being Satoshi? That's when these people are going to be like, hold on a minute, he is actually genuine Satoshi Nakamoto. He created this thing, you know. I mean, there are so many dominoes, like massive dominoes, that could fall. It's literally a case of when. That's all it is. It's not even if, it's when. And we know that, really. Fidelity confirmed that it filed a prospectus to sponsor a Bitcoin ETF, but said it could not offer further comment because of the preliminary nature of the filing. The ETF, if approved by the SEC, will track the performance of Bitcoin, that's core coin, as measured by the movement of the Fidelity Core Coin Index, a barometer the investment giant established to track the price of the digital currency. Whether the SEC approves the plan, however, remains a key question. The regulator has not to date granted any company permission to create a core coin ETF, arguing that the market was not yet ready yet, despite a growing number of applications. The SEC last week acknowledged a Bitcoin ETF proposal form from Van Erik. Although Fidelity-backed trust does not intend to sell Bitcoin, it will use the cryptocurrency to pay certain expenditures, which under current IRS guidance will be treated as a sale of such a digital currency. To be sure, Fidelity's bid to back the core coin ETF is far from its first venture into the expanding world of digital currencies. Again, they're calling it digital currencies. It's a commodity. It established Fidelity Digital Assets in 2018, a subsidiary that has since deployed its cryptocurrency custody and trading execution operations. The early endorsement was enough to draw clients ranging from institutional investors like hedge funds and family offices, according to its top executive. CoreCoin, along with thousands of other digital coins, has seen a flurry of buying over the past 12 months as a growing number of investment managers and banks grow comfortable considering it as both a potential investment opportunity and a medium of exchange. Don't fail. Though the world's largest digital asset has struggled in recent weeks, its current price around $52,430 is far above where it traded 1 year ago under $10,000, according to Coinmetrics. So let's see where we are right now, shall we? What is the magic price? 51.6, so it's even below what they said it was there. It's not looking pretty. That is not looking pretty. And again, like I said, it's Tether holding it up. Where is Tether when they need it? What's going to happen now? There's nothing going on. Yeah. is pretty much all I can say to that one. Like, oh my goodness me. I mean, there are quite a few things I want to mention today, but look at this. So I was genuinely quite shocked by this. I said, oh my god, Charles Hoskinson is only 33 years old. He looks 50 plus. He's much younger than me. No wonder I think he's an effing idiot. Again, I mean, it's nothing to do with the fact that his age. It's the fact that I was looking at a YouTube video of him talking crap. And I was just like, how can someone that looks like they've got enough, age and wisdom as you do, like be talking such bollocks? And now I realise he's only 33. He hasn't got a clue. He's a mathematician. He can do 2 + 2. And that is it. He's got no life experience in order to work out what Bitcoin is. Like I've done. You need to have a fundamental understanding of money. The theory of money. And commodities and securities. He's a mathematician. He doesn't know economics. He's created this absolute piece of crap and exit scammed it for $600 million. But now I know why he's talking crap. Because he doesn't know anything. Oh my god. And I remember literally, you look at some people and you think, oh wow, fair enough, he's walked away with $600 million. He hasn't got any mates though, because no one likes him, but he still made $600 million. But now it just makes you realise, it doesn't matter if they've got money or not. You might have all the money in the world, but you can still be a doofus like this guy. Just unbelievable. Unbelievable. Yeah, smart. That's a smirk, that is. Yeah, walked away with $600 million. Bribed a few people to look the other way, like the Wyoming, the blockchain lab or the blockchain technology lab at Edinburgh University. In fact, I think I mentioned this in my very first article. I wrote about this. See if I can find it, about the paradox of the centralized starting point. Because I've actually got the figures there. We can go, and also if you go to the Forbes rich list, he's also mentioned there. Estimated to be worth $600 million, which he exit scammed. And if you see a video of Craig in Africa, Charles Hoskinson is one of the first people to get up and walk away. Out of pure disrespect. I mean, what an arsehole is all I can say there. So I mentioned here about exit scams. There we go. So, oh yeah, I mentioned it here. Look, Bitcoin uses proof of work technology. So does this give other coins that use proof of work fundamental value? The short answer is no. Any currency that has a starting point from a central point of authority, such as Charlie Lee and Litecoin, Vitalik Buterin and Ethereum, Charles Hoskinson, Cardano, etc., have a fundamental value of 0 because they all have a fundamental influence over the growth of the network from inception. This explains reports that both Charlie Lee and Charles Hoskinson exchanged most of their respective holdings for fiat USD at the peak of the speculative bubble towards the end of the year 2017 and no longer encourage any further developments of their projects. This particular practice, where the creator of a cryptocurrency with a fundamental value of 0 implies to others that it could one day have a higher value than Bitcoin and encourages others to buy in only to push up the price for the purpose of selling their own holdings, is known as an exit scam. Charles Hoskinson was featured in the Forbes 2018 Richest People in Cryptocurrency list with an estimated wealth of $500 to $600 million. He has since lavished large donations upon respectable institutions such as the Blockchain Technology Laboratory at Edinburgh University and a Cardano Research Center at the University of Wyoming. Oh dear, oh dear. And look at this. This is him in the Forbes Richest People in Crypto. Let's have a look at this. Oh, they've got CZ in there now. Here we go. There, look. Profits of Boom. We meet crypto's rich list. So look at this. So we've got Chris Larson, I think he's XRP, I think. Joseph Lubin, Chao Peng Zhao, ZZ, Cameron and Tyler Winkleverse, Matthew Lemon, Brian Armstrong, Matthew Rosrak. I've not heard of him. Brock Pierce is in there, Mike Novogratz, Brad Garlinger, Charles Hoskinson. There we go. Notice how they leave out Satoshi Nakamoto. Look at this. Charles Hoskinson, estimated net worth $500 to $600 million. Co-founder Ethereum, IOHK, age 30. He's actually 33 now. Hoskinson was briefly the CEO of blockchain platform Ethereum before a boardroom brawl led him to quit. He then went on to start IOHK, a builder of cryptocurrencies and blockchains for corporations, government entities, and academic institutions. What a load of crap. I'm trying to make it sound good, but yeah. $500 to $600 million at the age of 33. It's not bad, is it really? But you know, he's not getting past me. I know exactly what he's done. I'm having none of it at all. Right, let's have a quick look at Cointelegraph. They're usually quite amusing with their articles here. What's this? Market Pro delivers up to a 1,497% return on investment as quant-style crypto analysis. What? What are 3 reasons why BTC analyzed to trade below? Oh, look at that! Oh, let's have a look at some of this bollocks they're going to come out with. BTC held $50,000 support while derivatives indicators remained healthy, signaling investors' optimism. Coolcoin is showing a tendency above $50,000 on March 25th. The 10% drop over the last 24 hours happened despite Tesla allowing customers to buy vehicles using BTC. In addition to CEO Elon Musk affirming that it will not be converted to fiat currency. On March 22nd, the United States Federal Reserve Chair Jerome Powell stated that Coolcoin was too volatile, backed by nothing. Absolutely, yeah. And more of an asset for speculation. Curiously, on that same day, BTC lost $56,000 support, which became a resistance. Traders worry that the pump might have been news-driven, while the downtrend movement shall prevail. Although this is possible, derivatives indicators aren't leaning bearish, and any descent correction will likely meet strong support at $50,000, of which it's touched on pretty quickly. You know, further premiums remain bullish or whatever. I mean, these metrics mean absolutely nothing. You know, everything on Coolcoin is built on Tether. Literally everything, because that's all these doofuses do is just simply look at the price. They've got no fundamental understanding of this thing, as I have banged on about many, many times before. So, let's... what we'll leave it there because that's a nice 40-minute show. You've got time for ding a dong. Shout out to everybody in the chat box. If you do have any questions, please feel free to put them in there. Diddy Weldon, Oxano, and Goose Tech, and Matty Ray. Nice one. Great stuff. All right, so Matty, I'm not sure what your handle is, but we'll do Diddy, not Duddy first. There we go. Swiping to send on the way. Got it. Oxano, can't remember what your one was. Goose, I think I've got your one in there. Yeah, Goose. Swiping to send on the way. Oxano, Matty Ray, need yours. Put them in the chat box. Give you 8 seconds. 7, 6, 5, 4, 3, 2, 1, 0. There we go. Saved myself some dongs. Oh, Xcode listening. Vanilla BSV. There we go. VA, that should come up. Vanilla BSV. Swiping to send on the way. There we go. Nice one. Right, we'll leave it there, folks. As ever, same time tomorrow. Remember, we've got Bitcoin Bulletin Charts in the morning, followed by a bit of afternoon crypto comedy, and followed by the main show live at 5 every day. Catch you guys later. Get paid for posting your pics on Relica. Download the app now at www.getrelica.com. Get your tweet etched on Twitch, forever on the Bitcoin blockchain. Do it today at www.jointwitch.com. BuyBSV.live, the best place to buy Bitcoin SV online. Support independent content creators on micropayment platforms such as Streamanity, Twitch and Relica. We should profit from our data, not the large corporations who track, monitor and sell it. If you enjoy the Bitcoin content that I produce, please support me by heading over to www.satoshi.tv, where you can keep up to date with all the latest news, gossip and content as it's created. Thanks very much. To get started in Bitcoin, go to freebsv.com, where you can claim your free Bitcoin. Then head over to Twitter and follow @IamSatoshi, where you can take part in his very generous and world famous free giveaways. The future of advertising meets the power of Bitcoin at Tonic Pow. Get paid for posting advertising campaigns to your social media profiles. Go to www.tonicpowads.com.